We have John Stoltzfus. He's Managing Director and Chief Investment Strategist at Oppenheimer Asset Management. John, great to have you with us here. Thank you very much for your time. John, I don't know how much you're focused on the market here in India. I mean, if you could just give us a scope of your involvement and participation in the Indian market from an Oppenheimer perspective to begin with, and then talk about the market if you do track it closely, because I mean, it's really outgunned every other market in the region and around the world. I mean, the only market which has rivaled the Indian market for the last couple of years has been the NASDAQ. Go on.
Well, first of all, when it comes to India, of course, India is in a position right now where it appears to be well positioned to take on the process of diversification of the global supply chain away from one country's centricity. And we expect that India will continue to be and gather interest from global investors, particularly investors in the U.S., moving forward from both a current cycle in that the world is, the central banks have really been very vigilant on inflation, and yet in the process of it, they've seemed so far to avoid pushing some of the major economies, including the U.S., into recession. So we would appear to be on the verge of perhaps some sustainable economic expansion on a global basis. Our view in terms of globalization has been for some time now that the diversification process, which began probably around 2016 and has persisted since and gained momentum, will likely benefit both international developed markets as well as emerging markets. In the case of India, I think the story is, you know, those of us, I've been in this business for 40 years, we're familiar with the pharmaceutical names, the technology names, the steel names, manufacturing process, but a lot is going to expand. So yes, most certainly, India is an area of increasing interest in the U.S., and it certainly is reflected in the overall performance of ETFs, for example, that track that market.
Okay. So what does this mean for India? Because in the last 12 months, right, the Indian markets have put on almost 24%. You said you like the Indian markets, but do you think there are any more levers which could take the markets forward? And if yes, what would the triggers be from here on?
Well, I'd have to think that the triggers would likely be global economic expansion at a sustainable pace. I think it was it last week? I think it was it the IMF or was it the World Bank that raised their global growth expectations for this year? I don't recall which one of the institution it was right now off of the top of my head after a 14-hour day here in New York, but would say that India as an exporting nation and a nation that will increase likely to participate in exporting not only to the U.S. but around the world, this will likely benefit. And I think ultimately what the markets really care about is revenues and profits, essentially, from an equity perspective, as well as monetary policy, that it not be too restrictive so that it doesn't curtail growth, but also they don't want to see, the market doesn't want to see central banks that are too loose with the spending for fear of bubbles being created. So I think what it really, you know, as a portfolio manager as well as chief investment strategist at Oppenheimer, when we look at it, our goal is beyond, essentially. We are looking beyond the current date here, looking ahead. We have to think from a longer term secular basis, but near term from a cyclical basis, things are looking better for the markets around the world. And we think the leadership this year likely persists coming from the U.S., but as we see economies around the world that will increase demand for goods for exporting nations, this should really expand the global economic growth for all.
Hi, John. Good to see you in. And this is Nigel on this side. Appreciate you waiting by and, in fact, joining us on the show. You know, John, what started off as a China +1 and India is gaining, it appears India is headed to the only one. You know, and we're getting a little bit confident about that. But China, at current valuations, you know, do you think that they can attract some money? Or do you think India is doing way too well? Why do you want to get into a spot where you don't know what's going to come out of there with regard to policy, with regard to rate action out there? You'd rather stick to an earnings story like India.
Well, you know, I have to say this, from looking at the markets as a strategist on a global basis, what we have noticed was over the course of the last year or year and a half, investors stateside have diversified away from China. Much of that money either going to India or to Brazil and Mexico as well, and South Korea. And we would have to think that trend will likely persist. Much of that, of course, is not only current problems in terms of policy and working things out in China at this time, but also the sense that after the pandemic, just a reliance on a one-country-centric global supply chain puts everybody at risk, especially in a world that is so interdependent for so many things. So we do think that we think that the last 40 years, but particularly the last 20 years, where China, all roads seem to lead to China, this will see diversification. And we can't help but think that India, as a result of experience that global investors have had, as I mentioned before, in technology, sort of business services, manufacturing, steel production, et cetera, will likely continue to be a popular destination.
All right, John, we'll leave it there. Great chat as always. Thank you very much, and hope that this is the first of many that we hope to see you here on CNBC TV 18. Thank you indeed for joining us.